Righto, Money Miners, we're got a weekend special for you for the punters, the true punters, not the bit outside what we class as a money miner, a speculative money miner.
We're all speculators, Matty.
Right.
None of us are actually investing.
Mate, we're heading right down the bottom of the max level of speculation. And who better to bloody deliver it than the main man himself, super small cap man, Ahmed. Welcome back, Cobar. Welcome back.
Thanks, guys. I guess, we can take away from this that I didn't bomb the first time, so I can come back around this time.
We want you to just be the one that's fully accountable for all these small cap ones and not us, because we don't know in the weeds as much as you do.
Yeah,
and it's all geology based.
It's geology based, and I think you come at it from a similar perspective as us when you think of these companies, and that's trying to highlight the key risks, because punters out there, they want to have a they want to play the speculative game, and that's like one of the fun parts about mining stocks. But it's born with a lot of risk, and I think you need the expertise that you bring to the table to kind of dissect some of the things that might not be so apparent when you read those news releases. And we're kind of excited to do that in real time with you today.
In short summary, you're like us. You know something's fucking dodgy. You just got to find it.
That's right.
Mate, what's bloody... Let's talk about the recent specky stock runners. There's been a few and we never bloody hardly mention them. Mm-hmm. You take it away, mate. What has been catching the eye of Ahmed?
Mate, we gave him the list, not the other way around.
Hey?
But yeah, go.
Oh, there you go.
I mean, I think one of the things when you look at like speculative stocks is one of the, I guess, the rules that I kind of tell people is that you have to think about that. Like sometimes it's not always the rational thing that decides which stocks go and which stocks not. Like sometimes a region catches fire, and anyone that's in that region, irrespective of their the technical merits of their project, they will have a run as part of that. And that's basically the
neurology.
Yeah, and the aspect of the water cooler thing, right? Like when there's a TV show, everyone wants to watch it. So if you're in that region, everyone wants to kind of get on it.
There's a few of them at the moment, isn't there?
Yeah, and I think so. So I think there's this. It's like this holy grail that people want, is that they want to figure out this like perfect technical kind of matrix that they can use to figure out which speculative stocks are going to be like better or not. And it's not always the case, right? It's not always pure science. There's always a lot of other things that go on in the background which kind of fuel the fire, but are not necessarily the reason why it happens. But in saying that, where the technical part I think eventually comes in is that at some point the project has to deliver some value. And a lot of that really in the exploration phase, maybe not so much in the project side, but in the exploration phase, it really is that, you got to deliver some level of results technically. Otherwise, as good a ride as you have, it will come to an end at some point.
So why don't we start with the Cobar? That's a space that's been getting a fair bit of attention. I say lately, but it has been for a number of years now. I remember research reports coming out 3 or 4 years ago saying the Cobar is the next region. So there are producing mines there already.
They've been there forever, mate.
We exactly.
Looked at this picture the other day of a Cobar mine it looked like it was from the 1800s. It was definitely from the 1800s. The original processing facility, copper processing. facility.
I mean, the CSA mine, I think it's it's like started in 1870 or something like that. In some aspect of it. But well and truly, it has had proper mining operations since like the 1900s or something like that.
Yeah, and very recently we've seen some specky names that have been on quite the tear. AGC, named after our very own Ali GC,
who is now on Twitter.
She's on Twitter.
She's firing.
Give her a follow.
What is it?
AGC Money of Mine.
At AGC Money of Mine. Yes.
So to speak of the company, they've been, I think last time I looked, a 7-bagger. As usual, super, super volatile.
It was a 7-bagger. Now it's come off 40% already.
Oh, I thought it was like a 10-bagger. Now it's come off to 7.
Yeah, but it's just, a bit of mania.
And Talisman is another one. But why don't we start with AGC and dig into what you know about it. It's got an investor, a friend of the show, which we might talk about another day, who's been pumping it up somewhat. But I think it's an interesting company to speak about because of that speculative manner, like what we're talking about today. It's somebody pumps it up, it might have a bit of success, and then everyone seems to pile in. Then everyone's looking at the neurology plays. So What do you know about the Cobar to start with? And after that, let's dive into AGC specifically.
Yeah, sure. I guess the question about what do we know about Cobar, that's pretty simple. A lot, right? Like it's been explored for nearly 100 years. And I think you can maybe unwind why Cobar has this almost cyclic kind of interest that happens every time, and I think part of that is that there's probably as far as copper exploration goes in Australia, there's probably not as Australia is not as well endowed in copper terrains or prospective terrains as some other places. So if you look at Australia, South Australia, the Gola Craton, where BHPRs are kind of playing, that's an area. Mount Isa is another area, and then there's always been these kind of other areas. Patterson always has like a bit of a feel. Like every time someone snags something, then Patterson goes off. Like Winu, and now that's kind of died down now. And so Cobar has always been one of these areas where it's always easy to go explore there. And it's on the doorstep of the Lachlan Fold Belt. So, so some of like the big porphyry deposits like Cadia and some of those kind of projects.
And infrastructure long is the words a lot of people use as well to make it sound even better.
Yeah, that's right. And it's it's not that far from a place like Sydney. It's very well set up with infrastructure. If you're going to go in New South Wales, it's farmland, but it has a history, so people understand how mining works in that area, as opposed to some other parts of New South Wales, which are farmland, and you're probably never going to be able to get there or do anything meaningful there. Especially you look at the Lachlan Fold Belt, as it goes north, you're getting close to like Byron Bay and kind of, people that really love the land type of aspect. And that's going to be really hard to explore there.
Love punching bongs.
Yeah.
Nimbin. Go to Nimbin for a holiday, mate, if you want to go go and find yourself.
They're incentivized. Their leisure time is incentivized differently. Let's just say that.
Very diplomatic.
Yeah. And so,
shout out to Peter Finn. Cobar Roosters, bloody rugby league team over there. Yeah,
there you go. So Cobar, I think, has always been this place where there's always a potential to find something. So I can comment a little bit of my history in Cobar. Yeah, Cobar was an area that when I joined MMG, we were exploring in. And one of the issues that we found as a company the size of MMG was that in Cobar, it is, I shouldn't say easy, but it is very common to get intersections that look really good. And they usually turn into some small deposits, but they hardly ever turn into big deposits.
Why?
That's a good question. That's $1 million question, right?
If he knew, they wouldn't be drilling.
Well, to be honest, yeah, that's really the answer. But I think there's maybe some fundamental thing with the terrain that it doesn't have the same endowment as other areas do.
What specific conditions created CSA and not another CSA? What made that such a high grade deposit as the standout?
So the type of deposits that Cobar forms, I mean, I don't know how technical you want to get into.
Go deep, brother.
Excellent.
The Ahmed show.
So CSA, it's always interesting when you look at certain terrains. CSA is orders of magnitude bigger than anything else. So whatever mineralizing system that occurred at CSA, you can, from a geological point of view, you take two aspects to it. One, it could have occurred for a long time, so hence it deposited more metals over a longer period of time, or it was just a bigger system, right? So hence it carried a much bigger payload of metals to deposit there. So when you look at size of deposit, you kind of always go back to a system and you go, well, if it has to be big, it has to either have occurred for a long amount of time, or it just has to have focused a lot of material to a very small point, and that's just a big system, right? So it just seems like the CSA, everything that happens at CSA is no different than any of the other Cobar deposits, really, from a genetic point of view. But it's just that it seems to have more metal, and hence it's had this prolonged history of occurring. As they mine it, it gets deeper, but the grades still hang together, and it just keeps getting better and better as you go along. To give you an example, I think CSA, its reserve grade is something like 4 or 5% copper or something like that. Yeah, it's phenomenally high. And it's been held by Glencore for a long time. And if you look at their asset profile, it's probably not an asset that would sit in Glencore as the size or the type of asset it is. but it probably prints money. So so as a margin asset, it probably does really well. So so they kept it for a long time. Now
Yeah,
they put
and I think that's why they would have got it to the point where they could extract the value and then let's hand it off to someone like Mac that could go the trimmings a bit.
Run it leaner.
Yeah.
More
Yeah,
efficient
that's
cost
right.
basis.
They'd be the first to acknowledge that, right? They've kept a 20%, I believe, position in Mac the SPAC, knowing that Mac can run it better.
Yeah, and then it makes sense, right? Like you take the overheads out of Glencore out of it, and then the asset does even better than it probably does right now.
The Glencore, the CSA, the Cobar, as I understand it, I'd love you to fix my poor interpretation, but I think of it naively as just there's a bunch of these kind of small hodgepodge deposits everywhere, but nothing really has sufficient scale to be the cornerstone of a mine plan. And
That's right.
There's all of this.
CSA.
Yeah,
like
exactly.
outside of
Exactly.
CSA, yeah.
And there's all of this sort of speculation of consolidation. Maybe you can do these like hub and spoke models because there's heaps of spare mills everywhere.
Yeah.
But kind of figuring out how that pieces together is kind of difficult for me to understand.
And like the show notes, you put that really nice map of like the tenement, current tenement or license kind of like standing in the area, and you can kind of see what the problem is, right? There's a lot of people; they all have small patches everywhere. Like you could go back in history and look at a company like Peel, like they had a strategy where they went, and I think I can't remember how much they spent, but it was somewhere on the order of $10-20 million, like signing all these joint ventures, stitching all that ground together, basically to solve that problem where they went, we have something small, you have something small, you have something small. How about we all put it together? And the vehicle became Peel, but they were trying to do this hub and spoke model. And I think that's probably the strategy for people that are going to work around in Cobar. The issue that you often end up finding it is that Cobar deposits tend to be quite polymetallic, so they don't tend to be just one kind of element that comes through, and so each of them have their own kind of little idiosyncrasies from a metallurgical point of view. So it's not it's not like you can take like one processing route or one processing setup and then just repeat it everywhere. You always have to tweak it somehow, and then it becomes this issue that you can mine all these things, but then the pain just goes down to the downstream part where someone has to process them all and fit them into a mill or a flotation or how to get the metal out, the extraction method. And so that becomes an issue then as well. So that's a long way to answer your question in that, like the history of Cobar, I think the reason is that, it's catching flavor now and because people want to go explore for copper in Australia. And there's only a few places you can go that are easy, that are walk up. Like, you can walk up, you can get an intersection, you can find something small. You can maybe pray that it becomes something bigger, and then you can kind of commercialize it and go down that route. And for people that don't want to go and explore in, like, say, Mount Isa, where you have to explore really deep things, or Gola, where, again, you have to explore really deep things, then, like, Cobar always kind of comes first up for people to go to.
If you think of copper, shouldn't you be looking to find, like, a DeGrussa or something like that? Shouldn't you look where there's no copper? Because that's where these things pop up sometimes.
I'd say it's a much better strategy to look where there is copper, like the old sort of brownfield.
Why haven't they found one then, JD?
Well, I mean, most of the expansion comes from brownfield and whatnot historically. So if you go closer to a copper mine, you might be more likely.
See, this is the classic greenfields, brownfields problem that everyone faces, right? That there's two places to go search for copper. There's two types of copper terrains or any type of metal terrains, right? The one that doesn't exist, which you have to go find, or the one that exists and you can work inside, but then the challenge is going to be different. And so you can decide which pain do you want to take, because you could go and explore in an area and find out that the terrain you have may not have been great, and now you've kind of blown your time and your money. Or you can go to a place like Cobar, where you already have something to start off with, and then you're hoping to make it bigger or better or add something to it, et cetera, right? And this is the classic kind of like exploration problem that everyone runs into.
To be clear, you haven't sold me on the Cobar at all. I don't think I'd invest any money in because of the scale and the soft issues and the metallurgy problems. It just sounds like really hard work.
Oh, and the fact that if you're going to like your method of saying trying to find something in and around it all that's been going for a century, like to find it now after all the exploration, your probability of success is even lower, I think.
Where I look at it differently, JD, is like, there's been a real change in the natural consolidator in that region. Glencore, who was never going to buy anything, to Mac, who's going to buy something, probably.
Correct.
And so just predicting what they're going to buy, might be an investment proposition.
That's right. Yeah. And we were talking about this, previously in that, if you have an asset in Cobar, which could replace, some part of the mine production life at CSA, so they don't have to spend as much money, then, you're probably going to be quite an attractive opportunity for them. But if your asset, whatever you found, comes in at mine life year number 20, it's probably not something CSA is going to be very interested in right now, right? Because they've got plenty of other stuff that they can mine.
Yeah.
Sorry.
The outcome you speak to, Trev, is if you do find something. But if we're talking from an earlier stage, an exploration stage, the opportunity to actually find something sounds quite tough. But perhaps it is marginally easier now to get it sold and get a deal done.
With an existing
post something being
God, if anyone finds a fucking massive deposit in Cobar, I'm going to look like a dickhead.
Yeah, that's right. Yeah. We'll find how these comments will age over the next couple of years.
Well, maybe the two that reckon they are onto a discovery is in recent history is AGC and Talisman.
Mm-hmm.
And Talisman have had a pretty strong run that's kind of consistent over the last sort of 6 months. Maybe we start with them. The Kerry Harmanis company, their Durnings project or prospect is the one that's garnered a bit of interest. You've looked under the hood, Ahmed. What do you make of the drill results that have come out so far?
So I think they're a classic kind of one of these Cobar companies, right? They've got the eye-catching result, and now they're really going to find out whether that eye-catching result has continuity or not. Some of their projects, not Durnings, but I think some of the other ones were already existing deposits that people hadn't really drilled deep. And these guys have gone with a geophysical method that allows them to see a little bit deeper, and then they're using that as their primary way of targeting. But in what they've intersected so far, this is, I think, one of the things you kind of often do kind of the analysis, if you were analyst that was looking at this stuff, you try to always convert these things into, or I always did, you always convert them into a gold intersection, and you go what would this look like if it was a gold intersection? And that's just largely for the purpose that gold intersections or gold deposits are, make up well more than 50% of the industry, exploration as well as results. So it's always easier to understand the economics of what you have by referencing a much bigger data set.
Metal equivalent website's wicked for that, isn't it?
Yeah, that's right. So and there's a couple of these kind of
does that exist?
Yeah, it's really good.
Onto that.
Yeah,
I needed that the other day.
Shout out Mining Catalyst, I think runs that.
Yeah, that's right. So
shout outs everywhere today. So friends of the show, didn't shout out your friend, that friend,
good friend,
real good friend.
So what they have, I think it looks really good. Now, the initial results look really good. Now they're, I think, doing the follow-up program, and this is where the 10-fold increase or the 7-fold increase is either validated or not validated, and then you'll see whether the next lot of results come good or not. And I think this is something that we should talk about. We talked about it on my podcast once about what is the actual nature of a discovery. People have this thing in their head that it's always the equivalent of a scientific discovery or the eureka moment, that there's this one moment and everyone finds something, and then it's and often it's not. It's the accumulation of a couple of moments that have to kind of come together. And I think that's where so they've had the first thing, which obviously they know they're onto something. Now they have to figure out whether it actually holds together or not.
And to wrap it up, Ahmed, you've done some equivalent calcs here on the drill intersections. What did you come up with?
Yeah, so if you look at the intersections for this is Talisman that we've done. So they're 42 meters intersection that they got out of their discovery hole, which was, I think, drill hole 9. I can't quite remember exactly what it was. But you do those and you get they're essentially, if you look at those intersections, they're an equivalent grade of 1.56, a gold equivalent grade. And the gram meter, which is often a thing that we often use, which is essentially, gold is grams per ton. So you just take that and times by the depth of the intersection or the length of the intersection. And so that gets up to 65 gram meter intersection, gold equivalent. And so, anytime you get intersections that are above 50, you as an analyst, like I would always look at those. And then if you start getting multiple amounts of those, then you kind of try to see how well you can hold these things together. And anything over 100 tends to be quite unique. There's not many projects that get them. And this is where kind of like the Cobar story comes in, is that often I think in Cobar you would get if you did all the equivalent calculations, you would probably get a lot that are between that 25 to 50 to 75 gram meter intersections. But it's just that the repeated ones, or looking around close to them, you probably won't find that many that'll come around them. So that's the other aspect, is that one is the intersection, but how well do they all tie together is the second part.
Yeah. Well, the more copper price goes up, the more incentive there is to string all these little things together as well. So
I mean, I think like to go back to why you would pick Cobar is I guess if I wanted to sell people on Cobar, what I could say is that you already have a number of deposits already existing, like various forms. You already know enough about them that like the problem is not necessarily finding them. The problem is really understanding how you can push them through kind of a mine plan. And so in that sense, and then it just becomes basically a play on the copper price. If the copper price goes up to a certain level and you can do that profitably or more profitably, then it would become somewhat akin to kind of like the WA gold fields, right? Where there's a few people that own the infrastructure and there's a lot of people that mine things and sell stuff to them. So you could probably end up setting up something like that at Cobar as well, if you can understand your metallurgy of your deposit, that it can go into an existing processing stream.
But you look at those zinc grades, like 0.2% zinc, 1.3% zinc. It just doesn't look like those zinc grades are going to be sort of enough to move the needle to help supply the galvanizing stuff for DSI.
No. So the one downside here would be is that it's more lead than zinc, and and that's always a trade-off. You always have to play around with these things. Is that you only really get either lead or zinc out, and with these like zinc grades, it's more a lead deposit, which probably doesn't have the same value attached to it.
That's not a DSI sort of supplier, is it?
No, they need the galvanized zinc.
The good stuff.
Otherwise, the ground will fall in at mine sites everywhere. But DSI wouldn't use that. They would only use galvanized zinc.
Because I've been looking into I guess the supply demand dynamics for zinc. Like we like to delve into. You're into the tin, or into the uranium. JD, you're
into everything.
Niobium, fucking everything. But and the way I've sort of come to understand it is like it's all a function of how many bloody bolts and sheets of mesh DSI are dipping in the gull each year. So look, if underground mining lifts, that means DSI lifts, which means it lifts zinc. So essentially we need more underground mining to get more zinc mining. That's how I've sort of come to understand this sort of, really on the macro side of things.
It's just not going to come from the Cobar, right?
No. So I think can't rely on talisman. Bloody AGC. AG. Oh, I was actually talking to Ahmed, not Ali. Australian Copper and Gold. Can you get a better company name to really hone in on the thematic right now?
Go Australia.
Go Australia. Go Australia. What's the go here, mate?
It's
she's a bolter.
What they've done really well is name the company very well. So if anyone ever searches on Google, they'll get exact what is it? SEO,
good SEO.
Optimizations are going to be great.
In an ETF one day.
Yeah, that's right. And I think this is I think you guys already talked about it. The initial results they got, definitely. Up their market cap. And this is also something, I often kind of used to talk to my colleagues about, is that, the underlying value of a lot of exploration companies is actually quite low. So when they have this result, they become hugely overvalued very quickly because there's very little.
Overextend on low volume.
That's right. And then and then it's really a difficult proposition for them to actually hold that value to the value of the company has to catch up to the market value as opposed to the other way around. And so so you often see these kind of quite high rises, and then when the subsequent results, which has happened in this case, they haven't been as good as the initial results, and then people leave just as quickly because now everyone comes to the realization that it's a speculative stock, but they've now bought into a speculative stock that's overvalued instead of the other way around.
And they don't want to be left holding the bags at the very
that's
end.
That's right. Yeah.
There's been a few they've got that funny looking price chart where like just bolts up on whatever initial kind of drill results, and then it's coming crashing down. I don't know where it's going to land or whatever, but we've seen charts that look like this kind of, over and over in the last couple of years. I can think of a couple. There was that Cobra was one.
Cobra, yeah.
Cobra. That
Tempest.
Tempest.
They went from like 2 cents to 20 cents because they thought they were finding copper near
I
Golden
remember
Grove.
Stavely back in the
back
day.
down.
Stavely was another one.
Yeah. AW1.
Yep.
But yeah, even what was the one that pivoted back to gold recently? The SEDEX discovery shot up. There was the Coda as well. Did that thing as well. Lefroy, remember? They all just go up and drift.
The
back.
Australian punting.
Rumble Resources, the other one. So there's
Metal
a lot
Hawk.
and then like on the flip side, sometimes you've got a real bloody discovery there, and it just fucking keeps going up. And
that's right.
Yeah, differentiating what's going to be the real discovery versus the false start, which we see in all these kind of charts, is
Much
really hard.
quicker to rattle them off too, Trav.
Yeah.
The true ones.
Yeah, it is much easier to remember.
That's right.
Well, they stick in your mind a bit better.
WA1, Spartan.
That's right.
Why don't we change jurisdictions and go over to Africa? I'm Trevor, I won't steal your thunder. You've done a bit of a preamble here, but Prospect Resources was a company that caught our eye a bit when they managed to finally get the data and some tenements together in Zambia, in the western part of the Central African copper belt there, known for not quite as high grade deposits as Kamoa, those sort of stellar 5%ers, but nevertheless some big copper, cobalt type deposits.
Yeah, it's super interesting kind of, conceptually this company. We actually had a bit of a yarn off camera with Seppo, who commented quite a lot about BHP's approach from that South African investment banking dynamic. But I think he also does a fair bit of work trying to incentivize substantial copper exploration funding to find its way into the likes of Zambia, etc. And we spoke a bit off camera about Prospect. He's even done some LinkedIn posts on it, and we're kind of curious from the lens of understanding that there's some really interesting deposits in Africa, but getting sufficient exploration funds, and these are often the deposits that only really work for giant companies as opposed to small exploration companies.
Correct.
Would love to get your view on I guess like this project, the potential of it to kind of to come together. It's pretty early days as I understand, but yeah, I mean they've got $11 million I think left, which is more than most exploration companies have to enact a kind of a thoughtful exploration program. Would you be interested in this company and the project?
Yeah, I think like if you're going to do anything in copper, eventually all roads lead to the Central African copper belt. So you either got to go to the DRC or you got to go to Zambia. DRC comes with its own issues that you'd have to deal with, and I think one of the reasons why this is a really good deal for Prospect is Zambia went through this period relatively recently where they had a government change, and the government wanted to change the tax regime or the way they would essentially allow the utilization of the resources. So effectively, the effective tax rate in Zambia could be 100% for some mines the way it was going, and so that led a lot of people kind of leaving Zambia, and that's where it left a lot of these assets around. Like the Mumbeshi copper project, it's not a new discovery. It's been around for a while, but it would have been left by, in that kind of exit of companies going out of Zambia. And then what ended up happening is, you had a lot of local Zambian companies that took all of these assets. And, to be fair to them, they probably didn't have very much interest in doing any work on them. They were just kind of holding it as an arbitrage that eventually when people come back, they will sell these projects back to them. And I think this probably fit right into that category. And so I think Prospect has done really well. There were some legal problems with this thing as well, which they solved. Like they paid $6 million to buy this thing. They're probably going to buy somewhere between, 500,000 tons to 1 million tons, maybe a little bit more of copper. In a part of the world where they're very close to already existing assets that could process this thing easily. So from that point of view, essentially, like this is now an exercise for Prospect to just de-risk this asset to a point where either they can raise the financing, which is probably, I don't know, I'm assuming here it's probably not going to be their modus operandi, but it's that if they can get this asset to a point where it looks really good, then someone will take them out.
And the context of the majors in Zambia is interesting as well, because I think is Glencore been kicked out of Zambia? Yeah.
They were out of Mopani, was one of the mines that they'd previously had.
So they've been kicked out of Zambia. You've got the likes of First Quantum who've got the balance sheet stress, and they've sort of talked about kind of what that means for their Zambian assets potentially. So we'll see how all that plays out. But Zambia kind of feels primed for the likes of some of the miners who are wanting, the Western miners who are wanting copper exposure to actually put real money into for proper exploration.
That's right. And I think, this is where I think the copper space is a little bit interesting now, in that we've probably lost a lot of what I would say are true copper mid-tiers. We've kind of lost the Oz minerals. Like Sandfire will probably be one in that category now. But it's been a real divergence. You either got majors, and they're probably going to become less if BHP takes out Anglo or something like that.
Mantos is gone. Copper Mountain's gone.
Yep.
Yeah, there's been a lot of consolidation. You're right.
Yeah, and so you either have juniors that have these assets, and not just this one. This is probably still a $1 billion or $2 billion kind of capex project. If it gets to that size. So you have juniors that are going to have to build $1 billion deposit, or you have majors which are trying to look for multi-billion-dollar assets. And so this is where, in the notes, I kind of put this theory. I often have this theory called the rising tide lifts all boats kind of thing when it comes to M&A, is that when the moment comes where people are going to look for copper assets that they can buy, they're going to go for things that are going to be on top of the list. And if Prospect can get this thing to look really good, where it can get into the top 3 or top 5 copper assets sitting around, then someone will go and take them out, because that's really what they're wanting to do.
Well, it's interesting you say that, because you could almost argue we're at a point in time where copper M&A is very, very punchy, very high. There's been an immense amount of interest, a lot in South America and whatnot, and Mac the SPAC was a float here. There's Oz, like you mentioned, happened not too long ago. Obviously, Prospect isn't quite at that level yet, but what takes, as Seppo kind of said, what takes it for a major to go to Zambia and pick up these, one of these types of...
Basically, a major would want to see some of the key mining aspects de-risked. They would want to know the metallurgy is kind of well understood enough that, they would want to know how much, recoverable copper is hanging around.
Sure.
But then they just want to they want to be able to de-risk the key economic parameters to understand the economic recovery of that metal. And the more work you can do to add more confidence to that, the easier it is for a major to make that decision.
Yeah, perhaps the question should have been framed a bit more broadly, because Prospect clearly isn't at that stage yet. But do you see a future, a nearer term future, where the likes of a BHP, a Rio goes to a jurisdiction like Zambia?
I think if you're seriously going to look into copper, you'd have to go through the copper belt at some point. BHP has had a checkered history going through the DRC and Zambia. But companies like Rio haven't. They have worked in places like Zambia, Angola, Namibia for a long, long time, so they don't have any issues. Anglo has worked in this part of the world as well.
Barrick's in there, and they're hungry for copper too.
And even even the Newmonts, Newcrest had a strategy to go copper gold as well. They picked a certain deposit style, which meant that they weren't in the copper belt. But other people will want to diversify, particularly gold companies at some point will try to diversify. And they will look at these assets. As far as if you're commenting on whether Zambia is a jurisdiction you would go into now, I think it's much better than it was probably 5 years ago.
Yeah.
Right? It's a much more friendly jurisdiction. The government seems to be more interested. And they also want to try to get some of the Chinese influence that's come into Zambia, out as well. So they want to like level the playing field. So it's not just Chinese companies that are investing in there. So that I think would work.
On the flip side of that, do you think it's a jurisdiction that can be a little harder for explorers because of, if you do discover something, it's going to have such a big CapEx bill, kind of similar in a way to South America and the Andes? We don't see perhaps as many juniors exploring there as the likes of a Cobar because it's just expensive.
Yeah, it's a good point, actually. It's easy and it's hard for explorers. It's hard in that if you wanted to build the asset yourself, then like most people in the market will probably look at you and take it with a grain of salt whether you're gonna build. Like if you're a junior and you find this several billion ton porphyry in South America, and your market cap is $100 or $200 million, like what's the likelihood that you're gonna raise $2 billion to build this thing on the side of a mountain? Like highly unlikely. Yeah. Right. So people take it with a grain of salt that you're never going to build this thing, right? You're just de-risking it until a point, and you're just de-risking it so you get into that list of projects that gets bought out when the tide turns, right?
Go into the weeds for prospect for us, mate. It's looks like one of those ones, freaking huge, not that high grade, but is 0.5% copper what we're going to be looking at for the future for these new mines that are going to be developed.
Yeah, like 0.5% is pretty much similar to what you'd get out of Kansanshi, you get out of Sentinel, which are the two first quantum ones. Lumwana is about 0.5, 0.6 as well. Yeah. So it's not really, the grade is not so much an issue. It's just really the size. So
like, what's Lumwana? That's, you see, 10 million ton of contained copper, is it?
Yeah, so so all of these are like 5 to 10 kind of million tons, just in copper, and then like there's some of them have credits. Like Kansanshi has gold, so it probably ups it a little bit. Sentinel has there's a deposit called Enterprise close to Sentinel, which is nickel, so you get a little bit of benefit out of that as well. But it's just more the size that once you get to, I would say several million tons of copper, like contained copper, then I think you're kind of looking at companies getting in.
Is this classed as a porphyry or?
No, so this is a type of deposit style called sediment hosted.
Okay, so similar to Mateo?
Yeah. So along the same line, so they, like these are, I guess, quite specific to the African copper belt. Yeah. So they're sediment hosted. They're the typical sediment hosted ones, and then there's other styles as well.
Yeah, interesting. That's the drill section here, eh? That one.
Yeah, so like when you finally put this episode out, you can show that graphic. But I guess what I wanted to highlight there is that you see that the top part of the deposit is weathered. So it's not primary sulfides.
So that's where that base of oxidation is.
Correct. Yeah. And so one of the reasons why, as a geologist evaluating these, you look for these things because, most of all of these assets are open pit mineable. And so if you can't make money out of that top part of the ore body, it's irrelevant how good the deposit is underneath because it's never going to be mined underground, really. Right. There's very few underground mines in Zambia, and they have to be huge to allow you to go and mine them. So because you got the base of oxidization, then you got the top of fresh rock. So that's a pretty thick. Yeah, that transition zone's about 100 odd meters. Yeah, so for people wanting to understand what this means, like the base of oxidation is where you have basically the top part of that rock is what we call oxidized. So it has no relevance to the fresh rock at all. And between the base of oxidation to the top of fresh rock is what we call a transition zone. So it goes from basically being completely alien, completely being moon rock to earth rock, right? And there's a transition in the middle. And that transition is one of the parts which often causes a lot of complication. Yeah. Like I know in prospect stuff, they mentioned that they were getting on average like 78% recovery in that transitional zone. And that's high, right?
Yes.
Like if you can make that hang result together for the whole deposit, like that would be phenomenal.
Yeah. So the transition zone's tough because it's like which processing plant are you sending it to? Are you sending it to the sulfide or the
correct?
The oxide?
So when you have copper oxides which sit in the oxide zone, they are relatively easy to process. This is basically an acid that they go in and they get an acid bath, and all the copper comes out, and all the other stuff goes away, and that's relatively easy. Sulfides are relatively easy because they can be floated, and that's the main way. But in that transition zone, you can either have oxides, you could have some sulfides, you could have some silicates, which are basically zero recovery. And so depending on the proportion of how that ore body changes in the middle, it really depends what type of economics you get out of it.
Yeah.
And so, so some of the things you look for is, ideally you would want ore zones to be vertical, because then in the same mine plan, so in the same horizontal plane, you can have sulfides, oxides, and transitions. What you ideally don't want is you don't want one horizontal level that's the same ore type and that has zero recovery, because you're basically mining this whole thing for whatever, a year, and getting $0 out of it.
Yeah.
Right? So you're just torching money for a year until you get to the part that'll actually make you money later on.
That transition zone, it reminds me, I was going to use one analogy, but I would have got in trouble with too many one community. But it's like West Australians supporting state of origin. They don't know where they're going for New South Wales or Queensland. They just can't make their mind up.
That's right. And there's a whole diversity of people. If you went into a bar, there will be a whole diversity of people that would choose to go one way or the other. And then that like that. And that's the same thing, right? Like, you got to map that out. And the sooner you can do that as part of that process, the better you'll kind of understand.
Yeah, and because we hone in on these, the cross sections, the information that we, the best information we're getting as investors at the moment, and we've harped on about it before. I guess the standard we expect, and if I saw something like that, Ahmed, that'd make me happy.
Yep.
Just like K-drill logos on the drill string to just identify that current and planned holes have been drilled by K-drill.
Yep.
But yeah, I don't know. What does sample management mean to you, Ahmed? like knowing that you've got the best in the business that take the responsibility of managing RC samples like that fucking seriously. That there's just not going to be many surprises in the assays. They're going to be the best reflection of what's in the ground.
Yep. And I think this is it's an interesting point you've made about cross sections, because they're I was talking to a friend of mine who's a marketing kind of that's her game, and she actually mentioned that there is a marketing opportunity for companies to put exactly what you're kind of talking about, right? Why not put who's drilled on these sections?
Well, we mentioned it yesterday with the bloody identifying on the maps where there's GetWet bladders, and I think we can apply it to drill sections as well. And I know that if I know the people drilling it are getting looked after because of K-Drill's bloody 5-star culture. And it's just boom, 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 reliable. And I'm not saying I'm going to throw me money indefinitely, but it makes me start thinking about it.
If companies just start popping very visually where they're using our advertisers, they will get more attention from us.
They will. They 100%.
They know we've done the work. We've vetted the companies that are going on to do the work, so we just know the best job is being done.
Yeah, we've done the DD, not diamond drilling. Right. Yeah. Then look, and if you work for K-Drill, you get to meet Ryan O'Sullivan. So fuck me dead. What more do you want in life?
I mean, you actually. I mean, I'm pretty sure I remember from our chat, you've actually spent a bit of time looking at African copper yourself, haven't you?
Yep. Yeah, quite a bit.
Are you how do you think about the small exploration company kind of having success in that region, just given the dynamics, the scale, and all that sort of stuff? Is that the model that will work in the African continent?
I think it depends where in Africa you are, because that's really one of the major kind of limitations. If you're in the DRC, you're just taking a lot of different risks that you don't have to when you're in Zambia. But as an explorationist, there would be very few better places to go than the Central African Copper Belt, right? There's enormous amount of potential there, prospectivity. You can look at Kamoa and Kakulu, right? That was a huge deposit found basically off the prospective geological terrain that everyone had been exploring for 20 years.
Yeah.
Right?
Yeah, JD, off the terrain where there's no copper, mate.
Mate,
That's
just
right.
But I'm on to something.
wait for the Friedland mention coming in now.
yeah, that's right.
I know JD's nervous.
Hey.
He's looking at me that I'm about to take the piss out of him, but I've held it in.
Hey, we don't have to sell Kamoa and Kakulu. Friedland does a really good job
When
of
you got a
selling the
stock
potential
promoter
of
that
it.
owns it, bloody,
Yeah,
I think you're
they've
safe
done a
there.
fantastic job. But from that point of view, I think so. Like for an exploration company, like I guess the benefit is that if you find something decent in that part of the world, like you are gonna either get taken out or have the opportunity to build a mine and then go from that point onwards. And so conversely, if you can take one of these assets and apply either a new type of thinking or new technology that can change the economics of one of these assets, again, you are well and truly off to kind of create a decent sized company or a decent sized mine. So from so going back to kind of the conversation about do you go to Cobar, like a terrain you already know, or do you go to a new area? Like ideally, if you're gonna go into a terrain, like ideally, like you often hear this term called elephant country, you want to go there, right? Because you have the potential to find big things, and things often get overlooked. Like for example, like there's a huge amount of copper exploration in the DRC and Zambia during the 60s and the 70s, kind of the colonial era, right? And what they were looking for was basically things that were like 8 to 10% copper, right? So they would walk over 5% copper deposits and go, not high enough. And so so all of these things were kind of left. Now, admittedly, a lot of them are now discovered, but still, that's kind of what you're talking about, right? So we've gone from 10% copper down to 0.5. So what's the potential of finding 0.5% copper deposits? Yeah, there's phenomenally high in that part of the world.
Plus, you've got the added benefit of some regions being locked off for periods, which just hasn't really been the case in Australia at all. So
No,
you
that's
could
right.
come back, like you said, these people might be sitting on these things, but relatively cheaply, you could get them into your hands and explore them more thoroughly. So
Yeah, that's right. I mean, Prospect, I think, has done a pretty good deal for $6 million. They've got an asset that if they, if they really put their mind together and kind of grow it to a meaningful level or change the economics for, like, say, the top 100 meters of it meaningfully, then I think that's going to be a pretty good bargain, right? So, there's very few million-ton copper projects you could buy for $5 or $6 million.
Mm-hmm. Yeah. Moving a little bit into a different African country, at one of the relatively early stage companies that has piqued my attention is WIA Gold, WIA.
Mm-hmm.
They're up 168% year to date. They're defining this gold resource at they call it the Kokoseb discovery in Namibia. I'm probably saying that wrong, but
Yeah, you just get used to butchering these names
I accept
until
it
someone
now.
tells
Just lean
you.
forward, say it quick.
the K resource.
Yeah,
Anyway,
I know. And then you really get railroaded when someone says that half of the letters in the middle are silent, so you don't say them. And
the only time people ever send me like audio recorded messages is when they're like, Travis, it's actually pronounced like this, and then
That's fine.
The delicacy helped us out one time. Shout out to your delicacy.
Tommy Woolrich, he put this on our radar when he came on. Also an exploration geologist, I believe, and it's been a pretty big outperformer since. The project appears to me to be shaping up. It's got there's fresh in like investors' minds. I think there was this transaction that happened in nearby in the same country. There was originally Dundee were buying Asino Resources. They've got the Twin Hills project, but then the Chinese kind of came in over the top. Entire Gold. They paid Canadian dollars $368 million. And so also a gold project. So people are making parallels and working out transaction multiples, but the market kind of also appears to be pretty optimistic about like an eventual corporate outcome as well, if you've got that precedent. I noticed a pretty well known mining figure, Joseph Al-Ragi, pop up as executive chairman and revealing that he already owned 7.3% of the company. Al-Ragi, of course, is the main man behind the tremendous development of Centamin and its Sakari deposit in Egypt, which produces nearly 500,000 ounces of gold per annum from the one project. Is well-known mining figure, and I think he lived in Perth for a long time too. But they've already got 2 million ounces at 1 gram per ton. What's the what's the when you go in the weeds and kind of look under the hood at Weird Gold? What do you make of it?
Yeah, I mean, I think you've done a pretty good job kind of summarizing why this is catching people's attention. Like after that transaction, like people are looking at basically comparable things and seeing what things are going to come to the top and not. From when I look at this project, I think this is one of the better stories of how a company has developed an asset all the way through. So a couple of years ago, I think it's like 2020, they identified on the back of a couple of other discoveries in the same belt, B2 gold discoveries, I think they were. I know Signal ones as well. They defined that this was in a prospective belt. And so from 2020 to now, so 3-4 years, they've gone from acquiring the licenses, building up a nice tenement package, doing the reconnaissance work, getting soil anomalies, then doing the drilling, finding a resource, and then in a couple of years of drilling, they've built a 2 million ounce resource now. And so I think
proper exploration.
Sorry?
Proper exploration.
Yeah, I think so if you want to see the full cycle of kind of how you go from basically nothing on a map to where they are now, I think this is one of the better stories. And then, I think you mentioned Joseph, and there's also Andrew Pardee who's involved in the company.
Not familiar with him.
I think he was in Predictive as well, and he's also in Sentiment as well.
Yeah.
And so you can tell, they have this pedigree of kind of picking areas and then really going hard and kind of evaluating and then moving them on. And so you can see that they already have that, I guess, DNA of doing it. Not just in Sentiment, but also in Predictive, and now in this as well.
Mining entrepreneurs who aren't afraid, to move in Africa as well.
That's right.
With their capital and expertise. Yeah.
And I think this is so one of the questions about why would you go to places like Zambia? So, on one hand, you have the technical challenge of going to, say, explore for copper deposits in Mount Isa, right, where you're exploring at 1,000 meters depth. Or you can go to places like Namibia, where you could actually find things sticking out on the surface. Here, I think a large part of this ore body was hidden just because it was under a meter of cover, right? And so, so people would have walked over it and not realized that top meter of cover was not representative of what was underneath. And so, so they overlooked it. Right. And so I think from that point of view, these guys have done an amazing job to get to this point in a relatively short period of time. They're still not, I think, from a market cap point of view, blowing the world apart, but they're probably, I think, fairly valued where they are right now. Because the next phase of this, and this is more a story about gold, is that when people find resources in gold, it's easy to get an inferred resource in gold. It's hard to get an indicated resource or a reserve. And for people that don't understand that, basically it's the economic confidence of how much metal you will get out of that deposit. So inferred means that you think there's all of this gold there, and as you do further work, you realize that some of it will get left behind or is not processable, etc. And so so often people use this rough rule of thumb that whatever you have as a resource in gold, you can ideally kind of think you're probably going to get 50% of it out on average into your kind of reserve, and from that point on.
Then you have to drill it tighter than a bloody porphyry project or something.
Yeah, because there's more variability
to lift the resource.
Yeah.
You speak about the journey as well, Ahmed, and it's interesting because I remember looking at this company late last year, and it really is a journey because there were days or weeks that the stock came down 30-odd% when some holes didn't come in so good, and it's volatile. But if you zoom out, you don't see those bumps quite as much. It looks like a much more steady upward trajectory.
Yeah, that's right.
That really wasn't the case on a
and I think basis. You guys have the Lassonde curve as part of your logo, but that's probably the summarized line of best fit out of that. But in reality, it kind of goes up and down quite a bit, and that's I think how you often get this where people will see the scale now, and they're really looking for red flags to kind of allow them to go, this is about as good as it's going to get, and I'm going to get out of it. But, these guys, there might be small periods or small programs where they don't deliver results. But, on overall, I think they're doing a pretty good job. And the resource is still growing, so they can still grow this thing out. So from from what I would want to see next to kind of see is that, the way, their grade profile means that this is more than likely going to be a low-cost open pit deposit that they have to develop.
It looks like a pretty mineable shape, doesn't it? Like and you look at 1 gram per ton, you think, oh, geez, that's pretty uninspiring gold grade.
That's right.
But the obviously the cost of mining matters a hell of a lot in that equation. But yeah.
Yeah, so I think that the two things I would kind of look for, like a company like this is like how well does the resource translate to an open pit kind of mining method, and what risk comes with that. And then 2, like, you also want to, because it's Africa, like certain jurisdiction, you also want to look at the capability of the people involved to pull this off. I don't think there's that much of an issue there. I think these guys are relatively pretty well set in the way they've done. And Namibia is not the worst. Namibia is like what we used to call Africa light. Like it's probably where you would want to go and work because, like it has a lot more stuff set up, particularly in this part of the belt. You already have B2 Gold. You've already had transactions, people coming in. There's also
a lot of Chinese investment as well.
And Navacheb has been going, has been operating for like a while. So so all of that stuff works. So I don't think that's that's really the issue. It's really going to be how well can they translate that resource into an open pit kind of mining method.
Just looking at the grade distribution, does it look like it's going to be in between having one big pit and satellite pits? Like you see a lot of those green, that's like the 0.3 to 0.5 grams.
Yeah.
Yeah, it just looks...
Yeah,
does look like it's very continuous with the grade.
So excellent technical vision here to pick this up.
But about me, mate.
But I think this is kind of like the thing. So there's high grade parts to this resource. So this is the type of stuff you look at. Is that maybe they'll start with mining the high grade parts in smaller pits, and then once once the economics have been paid off, essentially, then they can make it bigger and they can mine this mine half the earth around it and just make it a big pit and then work it that way. So I think that's kind of going to be their main challenge, is to figure out how they can kind of put this thing together.
What is it? 1.43 point, nearly 5K's a strike. So
yep.
she's a big bloody humdinger.
Yeah.
So. Hey, let's head out to the West Arunta, the bloody what we call the arsehole of Australia. There's going to be potentially the new mining district. But tell you what, there's some people that think they're going to be a part of it. Whether they're going to be a part of it or not, yet to be determined.
It's captured a lot of attention, so I think we've got to do a ding, ding, ding. I guess WA1 will just have to come up in conversation.
Oh, yeah, he's a WA1, but we don't want to talk about these other ones.
We're WA1's, it's in the billions in market cap now, so it's just like we're curious about the way the market gets excited about neurology in some ways, and also like the West Arunta is kind of this new district that's been unlocked because of landmark native title or something like that.
It's the word that's replaced lithium this year.
Niobium or West Arunta?
West Arunta.
Specifically West Arunta.
Fucking bloody
I love the new West Arunta project, which is like 400 kilometres away. Yeah, okay.
And also the other thing that people this is my pet peeve, is like when people talk about West Arunta, when you actually look at it on the map, it's a huge area, right? So what are you talking about? Like, it's like, what is it, 700 kilometers? We're West Arunta. Where in that part of the world are you actually at, right? It's a huge place to explore.
And WA1 themselves were looking for an IOCG, and they found this, carbonatite weathered blanket that was niobium rich.
Yep.
But I'm going to mention 3 stocks that are kind of neurology plays. Some of them have had some intersections of mineralization, but there's Rinken Resources, Encounter, and CGN the other one. And I've got a map here which sort of shows their relative kind of positioning in the West Arunta.
Yep.
A lot of them they've all kind of had enthusiasm for different reasons. Encounter was the first one early days because their tenement sort of had that boundary and they had the government funding, all that sort of stuff.
150 mil market cap
today
for Encounter.
170 when I looked.
170 yesterday.
Yeah, I remember it being big. Anyway, they
were huge because when they made their discovery in the Patterson, which is called Yanina copper or something like that, so they were quite...
Is that the one with IG? Is that a JV with IGA? Is that why IGA
it is
on the
now,
register?
but at that time, I think it was a joint venture with Antofagasta. I can't remember. It was some South American explorer. Must have been Anto, actually. So, so they really, they had a much bigger presence or market cap at that point than they do now. But you know, like I guess, like, you know, so you look at like the West Arunta, or you look at companies like, you know, in that part of the world. While Travis tries to get his charging cord for his laptop, I think that's what's happening.
He's doing something covert here.
Yeah, but you know, like, so a company like Encounter has always tried to work, I guess, on the edge of the world, like, you know, say in these like far off places, and that comes with, like, you know, benefits and kind of detriments. So one of the issues around that, like, you know, greenfields brownfields debate, is that when you go to a place like the West Arunta, so West Arunta has seen, I would say, pretty close to zero exploration for a long, long time. And so the problem that becomes is that when you look at companies that are exploring in, say, a part of the world like this, it's really hard to know whether the ground is half decent or not, because there's such a blank piece of paper to start off with. And so part of the reason why, your comment, Travis, why neurology kicks in, is as soon as one person puts a heat map in that part of the world, everyone thinks, well, actually, that's the best area to now be in that terrain, and everyone kind of focuses on that, because the rest of it just looks like a blank piece of paper, right? And I kind of, like, you know, explain it in the sense that, yeah, like, imagine when, you know, people were exploring different parts of the world and there was no map of Australia, or there was no map of you know, like Africa or things like that. You know, like, if you look at old maps of Australia, you know, like, when people landed on the coastline, they would go absolutely berserk mapping that part of that coastline, right, until they ran out of gas, and then the rest of it would just be like this arc that would go and be like, oh, I think it goes this way.
It could join up with South America, or it could join up with Antarctica or something.
Yeah, and I think that's like, from a technical point of view, that's really how, when you like look at these terrains, like, that's at the start, you go, you know, like, maybe there is an existing occurrence and you know it really well, and that's like that coastline that's been mapped really well, and the rest of it could be anything, right? And
you can see the bloody. Oh, you can just look at you can nearly predict the future with bloody the way exploration works, and with this Encounter tenement, looking at where the Looney deposit is and where Encounter is, you can see like, there be some bloody. WA would have to take Encounter and then spin out a new exploration play or something like that. It's like, because they need, like, if that Looney deposit, you need that. It's mining right up to the boundary of the bloody.
Yeah, and I think
but if you've got a 50, 100-year mine life, you don't have to mine near that boundary for a very, very long time. So the story of I'm going to say Erasure, which is the niobium, like the mad mine over there, that was actually, there was this ownership arrangement there where there was part of the package was privately owned and they were the operators, and then there was another part of the package originally that was owned by the government. Now, what did they do? They mined their bit first for years and years and years, and decades later did a deal to JV the whole lot. So, you know, if you're only producing a small quantity per year, you've got a long mine life, you're not under pressure to do that deal anytime soon, kind of thing.
Yeah. I mean, you could just wait them out, right? Like, you could just wait until...
Or Encounter could come, if they found, you know, niobium themselves, they could do the Altura thing and build, you know, have your own kind of come-to-market strategy with your own infrastructure and all that sort of stuff.
That's right. Yeah. And so, you know, so part of the history of why I think WA1, you know, like, in my point of view anyways, why they succeeded here is because the history of WA1 is that, you know, the people that created WA1 came out of a company called Tali. And so, yeah, so Tali held a lot of this ground, which is a private company for a long, long time. And they, over time, because they also did some, I think, phosphate thing or something.
Agrimin, so, I mean, Agrimin owns 40% of Tali, but it's the same people.
That's right. And so, yeah, so I think they built up the pedigree of working in this part of the world. Because like, my personal history in this area is I went and reviewed projects in West Arunta, and at that time, this is like 10, 15 years ago. And at that time, it was really the ass end of the world. And so we couldn't figure out how we could actually operate in this part of the world at that time. But with Agrimin and Tali, because they had this history of working there for a while, they solved the native title kind of problem of working in this part of the world. They also solved the logistic problem of working in this part of the world. And then they could go get the best ground. And they could then go for the most obvious targets they could go for. And one of them turned out to be their niobium discovery.
But they were still looking for an IOCG-style deposit. What was it about the
don't
area?
Let the truth get in the way of a good story here, right? Like, what do you look for and what do you find can be completely
wildly different. But some of the companies, you see a lot of neurology and a lot of small companies saying we're looking for, RE/niobium type deposits. But some are still looking for IOCG deposit types.
Yep.
What is it about the region there that makes it attractive for, an Olympic Dam and Ernest Henry style deposit? Why do companies seek that style from a geological view?
So the geological history of the terrain suggests that it was geologically active at a period where you would have had an IOCG mineralizing event. And so, so from other areas in Australia, we know that there were certain periods where you had this activity. Basically, it's just magmatism. There was a certain type of magmatism that occurred at a point. And this, the West Arunta was in the right geological setting at that time. And so it's got the right age rocks from that perspective. So that's part of the background. So you go, okay, this terrain was in the right postal code. It had the right type of geology mechanisms acting on it. Like mineralizing events acting on it. And then when you look at it, like there's very little problems with cover. And B, one of the ways you often find IOCG deposits is you look for magnetic or gravity anomalies. And there are enormous amount of them here that are almost kind of pinpoint anomalies, bullseye anomalies.
Yeah.
And so the reason why WA went and drilled one of them is that they thought that this bullseye anomaly that they had would be possibly an IOCG deposit, but it turned out to be a carbonatite, which also manifests as a bullseye magnetic anomaly.
Fun fact I heard at the pub about IOCG, I being iron, is Olympic Dam has the most contained iron in Australia.
Wow.
It was at the pub. That be right?
Yep.
Yeah.
So the background
More
of these
than the
deposits
iron
is that like the background rock in a lot of these things tends to be an iron kind of breccia. And so it's either hematite, mostly like hematite. So that's why the background rock tends to be this booming kind of anomaly that you can go and focus on.
It's interesting watching like neurology stories emerge because the spec punter kind of gets quite excited about the neurology play because they often feel like they missed the boat on the discovery.
Yeah,
and I'd
that
really
is fucking 100%. Like they're like, I can't go WA1. It's gone up too much. Got to go the other one.
And I get the mentality of being like, I missed out. It's already run and all that sort of stuff. I'd love to read a piece of analysis that over like history kind of looked at how did neurology plays perform relative to actually just owning the discovery itself. Like when Nova was found, did any of the neurology plays pan out, or were you just meant to hold Sirius? When Gruyere was found, did any of the neurology plays work out, or were you just meant to hold Gold Road?
And over.
Yeah.
The more mind-boggling, what happened in this case, it's more mind-boggling to me, is that Encounter had a larger market cap than WA1, even 8 months after the discovery hole had been found. So, I mean, work that out. I just can't.
Different register. They had Silver Lake, IGO on the register. It's got the crew.
But you're looking for something. You're looking for a deposit, not a certain type of share.
That's why I'm bedazzled by the 150 mil market cap.
Yeah, me too.
It's an interesting point in that, even post discovery, WA1 would have lagged behind a company like Encounter. Part of that might have been that it's niobium. And not many people understand niobium. I could preface that I had no clue about niobium until they found this thing.
None of us.
But when the other company starts to look for niobium, and that becomes the thing that you're no longer there for the reason you were. You're now looking for what they've got next door, but you're valued more.
Yeah, that's right.
Maybe here's left field. Imagine if IGO takes WA1.
I don't think they'll. Oh, yeah, they can buy it still. Yeah,
on the bloody top shareholder of Encounter. It's recorded.
There you go. Let's see how that comment ages. We'll see how that goes.
Piece of piss. I'll just keep saying shit. Something will come true, and I'll say, I fucking told you.
It will, Matty. It will. I think we've covered plenty of stories, jurisdictions, companies, things there. How about we call it there, fellas? Have we got some more we want to touch on?
Well, we got more, but I'm sure we can put it into a later episode and wrap this up now. And
mate, if the money miners want Ahmed back, you got to put in some demand. If you want him, we'll get him back.
If you've got a spec stock as well, like something tangible, is better than just a pure fucking moose pasture thing to look at, and you want Ahmed's geological expertise, let us know. Comment.
Yeah,
and,
or it'd be better if you don't hold it. Like something you're not emotionally attached to because you lost fuckloads on it.
Or if there's
I
a
would respect that.
Because I'm not sure I could tell you anything that's going to make you get
Feel
the money
better.
back.
Yeah, you'd probably be more miserable by the end of it.
But this
they-
is what you like, JD. You and I were kind of talking about, right? That they, like often I think, like when you look at a thing like West Arunta, like that part probably plays in everyone's head is that do you go for WA1, say early days, like and it's a discovery that you're not quite like sure about, do you go WA1 or like for the same maybe whatever $1,000, right? You could spread it on a bunch of other companies which are much less, and if they run, you could get this multiple back. So this is kind of like I guess the problem you kind of face as an investor, in that like in these new terrains, like everyone is basically like trying to figure out the difference between 0.0001 and 0.00001, right? And then there's really hard way to kind of tell that. So so what do you do? Like so you either you use availability bias and you buy Encounter because they have a pedigree of working in these terrains, and they they run a number of times, or you go for someone that's a new entrant that goes into this area, but they might have the best ground, but you don't know, right? And only the tape will tell after a while. So how do you kind of like differentiate them?
There's a whole bunch of these biases that we all regularly fall victim to.
Yeah, that's how it's.
Yeah.
Mate, God, if anyone wants to hear about Winsome, Patriot, bloody KRM, bloody RNXFAL, mate, you're going to have to put the demand in for Ahmed because she's ready to go.
Or if there's,
next week
if there's jurisdictions you want to talk about as well.
Oh, mate, wait till those Winsome bloody people get commenting. God,
Oh,
they'll bloody go. They'll come and pick you up and drop you off here. Like, they just to have it, get the coverage.
They got passionate supporters there.
Oh, did you see me bloody interacting with the bloody? I'm becoming I was getting invites to the Great Land Gold group chats.
They're nice
bloody,
people.
Yeah, bloody they were like
they're good
Stu Hines thinks I'm bloody. They were going to give me access and everything after me little spiel on him.
He's a nice guy.
He's a bloody. Gee, God bless him. I've won them over. I think they like me, or they were taking the piss out of me. I'm not sure.
The pommies are just nice. Some pommies are just nice,
You can't call them pommies, but that pisses them off.
Oh,
I think.
sorry.
Yeah.
They're still nice.
It's okay.
Oh, we've pissed them off before.
It's
and
okay.
they're
You
still
can fix that in post, so it's fine.
The Englishman. Yeah. Right, Ahmed, mate, that was friggin' sensational, mate. Did you have fun?
Yeah, this is good. Like I've said, this
you're
is
welcome
always an
anytime.
interesting conversation. So, and
It's
I think
fucking
like
easy. You don't have to do anything. You just talk shit.
yeah, that's
You
right.
don't have
Like
to
I-
set the mics up.
Yeah.
You don't have to do anything. Fuck the
No,
other
I just
podcast.
have to show up. So
Just come here and do it. But heaps of you. Good for
brilliant.
us because we don't have to do anything either. We just let you talk. So it's what we call a win-win.
There you go.
Right, thanks to all the bloody partners that have made it possible to facilitate Ahmed's existence here today.
Who do we have in the show, Matty?
Oh, mate, who did we have?
We had DSI Underground and we had
DSI.
K-Drill.
Okay, we did, JD. And bloody VRIFY. They're bloody, we've talked about them, mate. GetWet Solutions. Silverstone. CRE Insurance. WA Waterboards. Brooks Airways. They'll fly you out of the West Arunta.
And use Spark.
Oh,
while you're
how
at
good,
it.
how good Spark.
Yeah.
You know, those Christmas tree animations of stock graphs. Fucking unreal.
Hooteroo, Money Miners.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.